Back in the action here tonight. Back after holiday break, of course. Hope you had a fantastic holiday weekend. But it's time to get back to work tonight, though. We got a busy week ahead of us here. I want to make sure we are ready for the best setups coming tomorrow. It's, of course, Monday evening. It's July the 6th, 2020. My name is Joseph, by the way, in case you forgot. Been a while since we worked together. And as always, welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow. That's Tuesday's trading session, and I got a great video in store for you guys and gals tonight. The charts are already in the background, as you can see. We got the E-minis, we got the oil, we got the gold, of course. Lots of spikes into ranges on the charts. A lot of range-bound markets. We're talking breakouts. We're talking fake-out breakouts. We'll talk about everything tonight. Got a lot of great setups I'm watching around the edges of these ranges for tomorrow. I'm going to go into a lot more detail into all of these charts when we jump into the video tonight, though. Before we jump in, though, and get the plan ready for Tuesday, I just want to make sure to remind you to make sure you subscribe to our YouTube channel. Hit that subscribe button to make sure you never miss all the good stuff we publish on this video. Also, don't forget to, below the video tonight, in the comment section below, if you have any questions about anything we talk about in this video tonight, don't be afraid to type those questions in the comment section below. I'll get those answered once I finish up the video. And as always, I always appreciate you guys tuning in every evening. If you're like me and you rely on this newsletter to get your head right and get your charts right for tomorrow, if you tune in every evening, hit that thumbs up button for me. I always appreciate you guys tuning in every evening. Make sure you subscribe. Don't forget to subscribe. Hit that comment section with any questions. And as always, right, appreciate you guys supporting this channel. But enough of the introduction. Let's get this party rolling. It's the second week of the month of July. I know the first week was kind of a blur there before the holiday. Second week of the month. It's a very important week here. Let's grab the calendar to kick off this session here tonight. And let's take a look at the schedule here for us as we go into the second week. The second week of the month, there's a lot of important information there. First of all, the second week is notorious for being a relatively slow week. You know, we made it through the non-farm payroll report last Thursday, right? That's kind of the big news of the month. And typically this second week it's usually a very low news week, right? Not to say we aren't going to get some great setups this week, but don't expect there to be a lot of published news here on the calendar here this week. So you'll notice tomorrow, of course, being Tuesday, that July the 7th, we've only got one real news event here tomorrow, and that is that JOLTS report at 10 a.m. Eastern Time. Now, we'll be at our desks tomorrow at 8 o'clock Eastern Time. We open up our trade room every morning at 8 o'clock Eastern Time. So we'll be there tomorrow and every morning this week here, Monday through Friday, 8 o'clock, right, until the lunchtime session begins. But if you could only be at your desk tomorrow for an hour, you know what I mean? Again, we'll be doing this from 8 o'clock to 11:30 tomorrow. But if you could only be here tomorrow for an hour, I would definitely make sure you're at your desk, probably that 9:45 to 10:45 block tomorrow. So if you're working a job, you get a busy schedule tomorrow, if you could only be there for a half an hour, 45 minutes, definitely be sure to be there at that first block of the 10 o'clock hour before the lunchtime sets in at 11 o'clock, 11:15 tomorrow. That's the big news here for tomorrow, is that JOLTS report, the job openings, layoffs, and transfer survey. Don't let that green dot fool you. It is a pretty important news report. Now, as we go through the rest of the week, you'll notice there's not a lot on the calendar, right? The petroleum status report is, of course, on Wednesday. We got jobless claims on Thursday, and then, of course, a big PPI number to finish up with an inflation report on Friday. So there's one big news catalyst every day this week. But, again, you'll notice it's a relatively quiet news week. Now, that quiet news week may be overshadowed by kind of the waning of this second wave of virus, right? We saw the last couple of weeks how the markets kind of got spooked by a lot of new cases coming in, a high hospitals, the intensive care units have swelled up. But I think the markets and the data is pretty much confirming that whatever second wave there was does appear to be already past its climax. Look at the data coming out of Florida, out of Arizona, right? Kind of the big hot spots. And yes, there are a lot of cases, but the death rate is far lower than it was before. And the biggest thing is the cases are now dropping day over day, week over week. The news media would definitely want you to think that's the end of the world coming. But I'll tell you right now, the gold staying below 1,800. that big run on the S&P today, it should be your biggest clue that if there is a second wave, the markets clearly don't care too much about it right now. They clearly think there's probably more stimulus coming, second wave is behind us, and as we go into a busy, summertime consumer season, markets definitely showed some evidence that they agree with that as well. So tomorrow, again, big news at 10 o'clock, right? Definitely want to be at your desk at 10 a.m. tomorrow. Not a lot of news this week, but that does not mean we're not going to see some very busy markets in our trade room tomorrow morning. And speaking of which, right, don't forget every morning, 8 o'clock Eastern time, we trade together from 8 o'clock to 11:30 Eastern time. What I'll do is I'll put all the information for you guys, if you're not members yet, to get joined up as a member and come join me tomorrow in the trade room. I'll put everything below the video tonight on the blog. There'll be a big button below the video, or if you're on YouTube channel right now, there's a description right in the description of the YouTube video. Grab that link, the description of the YouTube video. So, again, tomorrow morning, 8 o'clock Eastern time, but make sure you're there, though, early. We'll get that front row seat for that JOLTS report at 10 a.m. Eastern time. All right, so now we get the charts. Coming up next, we got, of course, our schedule looks pretty easy, pretty straightforward for tomorrow. Let's grab some charts here. Got some E-minis, obviously, the oil right in the middle, and the gold. Like I said earlier, pretty much all three of these markets have some sort of spike into a range. So we're talking a lot about breakouts, fake out breakouts, and everything in between tonight. Let's grab the S&P first. The S&P, of course, my favorite right now for the most reliable setups that we're seeing in our trade room. And what do we know right now on the E-mini? Well, first of all, we've got the only market really out of all three of these that has a weekend gap. Now, this weekend gap may not be a big deal for tomorrow, but if the Bears can get a hold of this somehow this week, that weekend gap becomes a very easy target for the sellers. So if at any point the buyers lose their grip and the Bears take control of this, you have to be thinking that weekend gap from 31.15.5. Now remember, what is that weekend gap? It's actually last Friday's close, right? It's last Friday's close into Sunday's open, right? So it's Friday's close into Sunday's open. If there's a gap on that Friday close into Sunday's open, I leave the closing price, the closing price of last Friday, I leave that right on the chart, and you'll be amazed at how often those magnets will be in play here later on this week. Obviously, probably not the case for tomorrow. If it is the case, though, if we do turn bearish tomorrow, right, by some miracle here, well, not a miracle, but, if the buyers give up on this and the Bears take control, that 31.15.5 area is definitely going to be a big target. So what else do we know besides the weekend gap? We know the market is pretty obviously bullish, and what it feels to me, at least from my point of view, is it feels like the market came out on Sunday and said, whew, we dodged a bullet, right? The second wave doesn't appear to be happening as bad. Again, you turn on the news media right now. The news media wants you to think the world's coming to an end with all these hundreds of thousands of cases. But if you look at the data, the week over week, right, it's pretty obviously cases spiked, and now they're coming right back down. And it's that number of new cases that is always kind of the big concern. So this looked like one big sigh of relief here for at least for the S&P, that is, right? NASDAQ, of course, pushed new record highs again. So if the markets are always right, the wisdom of crowds, the markets seem to be pretty confident that the worst is behind us. So we know we're bullish. We want to be a buyer at support. What else do we have here on this chart? We get a range. Right, we get a range here. What does a range tell me? Ranges are balanced. So imagine that there's a magnet right in the middle, right, of that range. What goes down will likely come right back up, and what goes up, if these buyers, if they can't really break free of this range, you'll notice they've tried a couple times and they haven't been successful yet. Maybe they'll be successful on this time around, but if not, it'll come right back down into that trading range. So ranges are magnets. So if you think about it, right, a bull market that goes into a range, if we know that ranges are magnets, well, really one of the best strategies is going to be to buy underneath that range, going with the overall trend, right? Going with momentum, and look to use that range as a magnet. And that's really what my goal is for tomorrow. We know we're bullish. We want to be a buyer at support. So you'll notice I've got some support levels marked up here. I've got that 54.92. I've got my expanding triangle. And I think, and you notice here I marked the 51.5 level. This level is a very, very attractive area right there. A little trap low, below that 51.5 area. If I had it my way tomorrow, I would get us right down into this little sliver right there, right in this little spot right there. That would be, if I had my pick of the litter tomorrow, that would be where I get long tomorrow. Now, as you can imagine though, if we do get that deep of a pullback right now, that's going to feel pretty bearish, isn't it? Right? That'll feel like the market has reversed, especially if they fail to keep going higher. I'll bet if we get a nice deep pullback like that, we go down to my support trend line, down to my support swing, inside the buy zone as I have it marked up. I'm hoping that we're going to get a chance to fool a lot of these sellers in the market. I'm hoping that they'll see that strong move down. They won't look left. I'm hoping they won't look left and see that range. You'll see sellers most likely try to come in and sell short off that next pullback, right? Just like they did here, just like they did there, and hopefully we'll get that run right back up into that range again. Now, what I like to do is I never try to pick a bottom on these pullbacks. It's just really difficult to tell how far the market will pull back sometimes. So what I do is a little more reliable is instead of trading the breakout of this range, right? Because you can see they don't really work very often. Right? What I'll do is I'll wait for that breakout pullback to go. Then once I see bears taking their aim, I now know where their stops are. And now I can buy right into those stop losses. In fact, I like to look for a combination set up off these lows, a failure into a pullback combination. And really the goal here is I want to buy into, basically I'm looking for breakouts to fail. I'm looking for a breakout pullback to fail down in my buy zone so I can buy into the stops of those sellers. And then also, too, I can look for that pullback as long as that pullback is underneath that range. Now, sometimes what happens is the market goes running back up into the range, and you've got to use a little bit different entry, which is called a trap entry, right? So it really all depends on, and obviously we'll know more about this tomorrow once we get our hands dirty on this, but it's definitely going to be a seller failure into either a pullback or a trap entry, depending on what? Depending on if we're back inside of that trading range. Now, these little combinations, they happen a lot. Failure into pullback, failure into trap, and I want to find them, again, if I had it my way, it would be this trend line here, that trend line there, get this into pullback, failure into pullback, and then back up to retest the high. Now, I'm just simply drawing this on the screen right now. I cover a lot more detail of these same patterns, the pullbacks, the failures, the trap setups. I cover all of those in our free trading classes. I'll put a link for you in the upper right-hand corner. You'll see a little pop-up come up there. I would definitely encourage you, if you're not a member or if you haven't done so already, grab the free trading course because you'll learn all my favorite setups. You'll see lots of examples of how I apply those setups on our favorite futures markets. And so that way, once you take the free course, you'll be able to really understand more of what we do together every evening on this newsletter. So don't forget, pause the video if you need to, but whatever you do though, before the end of the lesson tonight, grab that free trading course. And again, I'll put all of the trade room links, I'll put all the free course links, I'll put all that down in the description of this YouTube video. So if I had it my way, I would look to be buying down inside that, right inside that battle zone. Now, I also want to give you a heads up too. The ideal scenario would be a seller failure off that trend line. But I'll tell you, sometimes when you get these big moves in the early part of the week, nobody wants to buy very high. And so sometimes, I mean, if you think about it, we might see up to a 50% pullback, right? I mean, would that be crazy? It wouldn't, would it? So it wouldn't surprise me if the market kind of falls out a little bit here. Now, it doesn't reverse, but falls out, right? Kind of falls at the top there as we go into the early part of the Asian session or the overnight London session. Now, in this situation, if I get a much deeper pullback, now that momentum becomes a bigger problem. It's the same basic idea, but now instead of getting aggressive and buying the stops, I'm going to wait for one try for the bears. I'm going to wait for two try for the bears, and I like to grab that trend line, and that is where the good stuff happens. Now remember, this is going to be it's a failure pattern basically. These failure patterns almost always, when they rip, they usually really race higher, and they oftentimes result in those trap patterns, right? Those little two-try trap patterns. So very similar to what my kind of, my pick of the litter trade would be, right? As I said earlier. But again, if it really tumbles, we can't get too aggressive. Wait for the bears trying once. Wait for them now trying twice. Once I see that nice, big, juicy candle running up, I can buy into all of those stops, use the range as the magnet, and then I can flip it around. Again, oftentimes these nested failures, they'll snap up. We don't want to trade inside the range. So what do we use to avoid buying high? We buy low with that trap pattern low. Now, I think it goes without saying, as I mentioned earlier, this is the no trade zone, right? We don't want to be trading inside the range. So if we keep going sideways here for whatever reason, if we keep going sideways here, my job is to sit on hands, wait for that breakout to fail, right? Because again, most breakouts will fail and we'll buy it right back up again. Same thing over and over again as we get underneath that trading range. Now, what if the market goes higher? The big problem is we've got that range, and that range is a balanced magnet, right? So what goes up will oftentimes come back down. And as I mentioned earlier, there's not a lot of confidence in buying breakouts right now for good reason, right? There's an obvious reason why those breakouts haven't worked very well. It's because the market's too high, right? All that big move overnight. Most U.S. session traders came in this morning and said, okay, give me something I can buy low, right? Give me something I can buy low. I don't want to buy way up here. That's paying a premium price for something, right? We want to buy at a discounted price. So what would be a scenario where I could get long as we go higher? Well, the first thing is you got to be thinking, where does this market want to go? If I take the size of this move higher, if I take that big leg up and I project it higher here, you know where it puts me? It puts me right about that 3209, almost 3210. That is a big top up there, a big top, right, for those buyers. So if I just simply kind of use easy math here, right, if I look at the size of that big leg up, just copy and paste it, bring it up here, you'll notice it puts me right on top of that 3209. That is good news, because if I can get a breakout here, I've got plenty of space to run overhead. And when it comes to having plenty of space overhead, that's the key to getting a good winning percentage, right, when you get a good risk reward ratio. So what does a breakout pattern actually look like? Well, there are two types of breakout patterns I trust the most. One of them is called a 1, 2, 3 breakout, where we see a higher high in price, a pullback to the moving average, and this is where I never buy this first pullback. I wait for the price to jump off the moving average. Then I've got proof. Then I know that 1, 2, 3 move, that 1, 2, and 3 move, that 1, 2, 3 breakout, as I call it. Now I know there's plenty of momentum on my side, and now I just want to find a level of support to get long at. So what I'll do is I'll mark up the high, I'll mark up that low, and that's going to give me now the low of what is really, right, a new hidden channel, right? So it's a 1, 2, 3 breakout, 1, 2, 3 breakout into a hidden channel pullback. And again, I don't trust that first pullback, right? For the same reasons why I don't trust any other breakout and pullback, right? I fade the breakouts when it comes to ranges. I buy low and I sell high. But if we can get some strength going here, that wouldn't be a bad idea going higher. Another option would be, let's just say we open up in Asia and the market just spikes. for whatever reason. If the market spikes and really runs here at the opening bell, watch out for this pattern. It's called a 2-try breakout pattern. I'm going to wait for a strong breakout higher. Obviously, at that point, it's been a successful breakout, but I'm not going to buy high on this because just as we saw earlier, right, on that big spike up, buyers aren't going to want to chase the market. What I want, though, is I need some sort of structure to get the trigger long. What I'll do is I'll wait for a shallow pullback and look for a higher high. The way that I describe this in my trade room is a strong move up, a shallow pullback, and a higher high. That qualifies this now for what I call a 2-try breakout or 2-try trap. The key is you don't want to buy too high up there. So once you see that strong move up, again, the giveaway is usually that shallow pullback. That shallow pullback, then followed by the higher high. Buyers are going to be drooling over that trap low below that, again, I'm just drawing it up right now, but let's say around 31.85 area, right, as we go. It really doesn't matter location. It just matters, can I get that set up above the high of that trading range? Now, the same thing goes for the sell side, right? I definitely don't want to be a seller off the high right now. We're a little bit too bullish to want to sell this market. In some situations, when I find myself at a major turning point, I can look for a crown reversal. I've got one setting up right now, I believe, on the oil. So we'll grab a look at a reversal pattern here on the oil in a moment, but we're not there yet on the S&P. We're just not there yet. The only turning point I see is up around that 32.09. We've broken free of the others. So I just don't think it's the appropriate time to be looking to sell this market. Now, with that said, though, I could easily be wrong about the bulls, and this market could easily take off to the downside, right? I mean, anything is possible. So if we do see a strong move down, you know my plan, right? My plan is to buy right into those stops as a failure. But if the sellers can actually hold that pullback and get a strong jump off the moving average, what do we call that? We call that 1, 2, 3 reversal, right? 1, 2, 3 breakout in this case, right? 1, strong move. 2, pull back to the moving average. 3, break down off the EMA. They haven't been able to get it to work yet. Maybe they'll do it again tomorrow. Maybe they'll try again tomorrow. At that point now, we know we're bearish. My job at this point now is I want to sell at resistance. So where do I find resistance? I'm going to mark up a trend line off of those new lows. I'm going to bring it up around these highs and look for these hidden channels. Now, there is a bit of nuance to finding those hidden channels, and we'll know more, obviously, tomorrow when we get into it, right, tomorrow in our trade room. But that's the general idea here for that reversal, that 1, 2, 3 reversal. And as I always say, I want that first channel test right off that high. The first time it pulls back to the high of that channel is a remarkably reliable sell in a bear market. Where's our target? Yes, back down to fill that weekend gap. That's a relatively easy target if these bears can take control. But that's a big if right now. The buyers did a really good job today at defending this. I'm hoping we'll get a nice deep pullback as we go into tomorrow's trading session. And hopefully, I'll see you tomorrow morning in the trade room, or at the very least, you'll grab that free trading course linked up in the upper right-hand corner. All right, let's keep going. S&P looks pretty clean and tidy here. How about the oil, right? How about the oil here right now? So oil, you'll notice, it's a very similar situation to the S&P, but there's one very big difference on this chart, and you can probably already see it. It's just how wide this range is. Now, I'm going to go over more of this in a moment here, but anytime I have a wide range, usually that means a wide failure, or a wide 2-try, as I call it in my trade room. So when I see a wide range like this, what does a wide range tell me? It tells me that momentum becomes a bigger factor. See, go back to the S&P real quickly here. The S&P has very little momentum that can build back and forth inside this range, right? But if the range was really wide like this, momentum could really build, right? And so because that momentum, really on the S&P, the goal is just to buy the edges, right? Get underneath these lows, get around some support levels. It's pretty straightforward, cut and dry strategy here on the S&P. The oil is it's the same basic idea. It's a bull market into a range. It's just you can see how wild, right, this market has been, right? Big move up, big move down, big move up, big move down. There's one thing for sure. We know we're bullish, but buyers have no appetite to buy high right now. You can see it, right? Every time I get these big runs up, it's like nobody's there anymore. It just kind of falls off the high. So we definitely know we're bullish on this. That is for sure. But, again, I would say the biggest concern I have for tomorrow on oil is just buying high, buying breakouts, right? Buying as the market's going higher. What I'd like to do is use this bullish bias. I want to buy at support. I've got my trading range. Now, this range is kind of a weird one, you'll notice. It's more of a triangle, to be honest with you. But the big thing, though, is what does a range tell me, right? Ranges are balanced, so we know there's kind of a magnet, right in the middle of that range, right? So think of a magnet right in that middle. What goes down will come back up. What goes up will come back down. So that's the basic idea behind it. We know we're bullish, so I'd rather be a buyer underneath this trading range. And we have a wide range here, which means a wider, failure pattern. Now, one very important piece of this puzzle is the triangle. We didn't have that triangle on the S&P. Triangles are usually pretty straightforward, where you want to focus on the edges of that triangle. So as long as you stay away from the middle and really focus on buying the ones below it or selling above it here. And again, since we're bullish, I would much rather be buying below it, obviously, than selling above it. So that's kind of the basic idea here on this oil. I want to be a buyer underneath the range. I want to focus on these kind of swings on these edges, because that's kind of the way that triangles are going to work best here. Now, if I had it my way, you can probably already kind of think about how this would work, right? If I had it my way here, what I would do is I'd get down inside this battle zone, get these bears to try to get that run lower, take out some of these, take out some of these edges, get that moving average coming down, and get that seller, get those bears to commit on the pullback, and just simply look for ways to buy into those stops, Wait for those bears to commit to that breakout pullback and just simply buy right into their stops, And this is that classic kind of combination setup I was talking about earlier. It's that seller failure into that bullish pullback as we go higher from there. So seller failure, into bullish pullback. Now, I also want to bring to your attention too, and again, we teach that entire sequence inside of that free trading course, as I mentioned earlier. I also want to kind of draw your attention here to a bit of a bigger picture move. You'll notice if I draw this thing out a little bit further here right now, you can definitely see there is potential that there may be a much deeper channel here, a much larger channel. And the reason why I mention that is, if you think about that larger channel in the context of this big round number, you get that $40 a barrel right below us here. With the second wave kind of, climaxing here right now, with the summertime driving season, with, of course, OPEC committed to production cuts, and with our Fed committed to easy money, in the form of stimulus packages, we know that if we do get that big shot going lower, I'm not going to just flip it around and call it a bear market just yet. If we do end up clearing through these areas, though, if we really if we really get knocked down here, so to speak, at this point, I would imagine that round number will be a magnet. In that case, they'll be trying to reload the bullets here at 40. At that point, again, I don't want to call it a bear market. What I don't want to do, though, is get too aggressive either, because all of that momentum will be too much to handle. So what I'll do is I'm going to wait for the bears to try once. I'll wait for the bears to try twice. I like to draw that trend line, coming off of that low. One try, two try, get a nice strong signal candle. Stops are right above those highs, and we can buy into those stop losses. Another one of my favorite really deep pullback patterns, or breakout failure patterns, would be if it does, again, a strong move down here. Another one of my favorites is going to be with a trap on this one. So one try for the bears, to try for the bears, right? These are what we call crown reversal patterns. In this case, though, it's a relatively straightforward idea here. If we get again, the whole idea here is if it really pulls back because of that big spike in channel that I mentioned earlier, I'm not going to assume this trend is broken. I'm going to assume they're trying to get that refill, right, to refill the bullets at $40 a barrel, and looking for the bears trying once, trying twice, and then I can take that rip going higher from there. I also want to remind you too, right? A lot of times when these types of breakouts fail, I'm looking for that strong shot up, that shallow pullback, that higher high, the moving average would come right over like that, and look for that trap below that low as well. This would be a nested failure into a two-try trap. Again, think about that failure into pullback combination as we talked about here coming off of that low. So now you've got a pretty good idea of what my ideal setup would be for tomorrow. If we do sit inside this range right now, we want to sit tight, right? Sit on hands, wait for that breakdown, wait for those bears to come in and foolishly try to trade the breakout, right? And buy into those stop losses. It's also worth mentioning as well that because we have this triangle, we may see this market really kind of kick off here, right? Whenever we see a triangle, there is potential for a breakout. But I want to kind of repeat that. There is potential for a breakout. We see just as many times where the market will look like it's breaking out and come right back down again. So you really don't want to try. I realize, there's a lot of trading for dummies books out there, and they'll try to teach you this pattern. These can have easy breakouts like this. I call these textbook patterns, because they rarely happen in real life, right? They happen in textbooks apparently. You look at a bullish triangle, right, in any of the popular books on Amazon, and what do? They tell you to buy the breakout. The problem though is it's a horrible idea to be buying above the high in a bull market, right? Because you've got no place to hide up here. If this market is to keep going, you're really stuck, right? If this thing pulls up and then V-tops like that, you're really stuck. What I want to do on this, I never tried trading breakouts in range markets because the range is there for a reason. So what I'd rather do is actually wait for that breakout pattern. Now, before I trade the breakout though, where is this market trying to go? Let's back this up here real quickly here, and you'll notice that there's a couple levels overhead, right? That 41.30, but the big kind of granddaddy of those highs at 41.63. So that's going to be where this market really wants to get to if, again, big question, if they can get that breakout going higher here. So I've talked about two breakout patterns already, as I mentioned earlier. One of them was that one strong move up, two pull back to the moving average, and three, right, that jump off the moving average. Now this is not drawn to scale. I really don't care how far that jump is, but there needs to be a nice strong pop, right, off the moving average. And as you can see before, just getting a strong move up is not enough to justify buying that first pullback, right? I wish it was that easy. Well, maybe I don't wish it was that easy. If it was that easy, right, there wouldn't be much money left to make in these markets because there wouldn't be that edge that experienced traders have. But again, I would ignore the trading books in this one. I would skip that breakout, wait for that 1, 2, 3 breakout pullback, right, and then mark up my high. I know I'm bullish. I want to find a support level, mark up that low, looking to buy the low. And again, I'm looking to buy the first touch, right? The first test of the low of that channel. Where's my target? 41.63, right up around those highs. Another option is that strong breakout, that shallow pullback, that higher high. What do we call those? We call those two-try traps. So two-try trap pattern. Now a heads up on this, I always like to try to incorporate additional levels of support and resistance, right, on these entries. So just because we see the pattern, I can really increase the odds of success on that pattern if I incorporate the low of a hidden channel. So I'm always trying to combine those breakout patterns with some additional level of support. If you're buying, buy at support. If you're selling, you want to sell at resistance. Now, speaking of selling, what are some options we have here going forward here? How could I sell this market? Well, it's a triangle, and one of the nice things about triangles is that you're going to have a lot of profit taking up around those highs, unless, of course, they can break out. So one option for me to get short is definitely going to be that crown reversal. So as we go higher, the buyers try once, the buyers try twice, and I really want that trap above that high. The trap above the high here will be very important because you're going to have that trend line coming up underneath, and that trap will really be key at avoiding, right, buying into that rising support. I call these crown reversal patterns. I talk a lot about reversal patterns in our free trading classes. That's one of them, of course, right, off the high of that trading range. Another one, which you've heard me talk about already, is a simple breakout, right? So if we do get that move lower, I'm looking for that failure and back up, right? Well, if they get a strong move down and those bears can hold that pullback now and they can jump off that moving average, now it's on. Now we know we're bearish. We know we're breaking out. The trend is new. I want to mark up that low, mark up that hidden channel. And again, I want that first touch, right? That first test of that new hidden channel. Now, where is that target going to be if we get this big run lower? There's a big target down there, 39. 39 looks like a pretty healthy target there for those sellers tomorrow, right? Down around that big round number at 39 here. If these bears can take control. Right now, though, I'm buying low. I'm looking to buy the breakout, but I'm not going to go forcing the breakout, right? And again, don't forget tomorrow morning, 8 o'clock Eastern time, I want to see you there trading this right there next to me. How am I doing so far, by the way? First day back after the holiday break. I know, right? A little bit of a fish out of the water here, right? Coming into this week here. Don't forget, hit that thumbs up button for me if you're still watching here right now. If you haven't done so yet, make sure you subscribe to the channel and make sure you join that free trading course. All right, don't forget, and again, post those questions if you have any questions. Let's go back to the gold now. Finishing up on the gold right now. So gold is, again, you can see very similar to that spike up, right, into this trading range. We know we have the range, and it's kind of a weird one, but it looks like that range is right there in the middle. So what is a range? A range is a big magnet, right? Ranges are magnets. Because of course we're bullish. What goes down will likely come back up. What goes up, right, will likely come back down, of course, if the buyers can't hold it. If the buyers can hold it, though, watch out, because we have a very strong move higher. And anytime I see a very strong move in one direction, another leg is likely. And you can definitely see 1800 and more importantly 1807. Now, I mentioned earlier that because we're staying below that 1800 right now, it does look like gold is kind of casting its vote on the severity of this second wave of this virus, right? So it will be important that we don't try to buy the breakouts as we go, because it looks like they're holding pretty well under the 1800. But if I can get these pullbacks here, get underneath some of these lows here, that would really be kind of the dream come true. So, big, strong push up. Another really big clue on this gold here is this strong move down. You'll notice I have it outlined there in that kind of purple little arrow right there, right? That strong move down is supposed to remind me that the best entries are going to come right below that low, okay? Right around that edge. So we know we're bullish. I want to be a buyer at support. We know we have a range, which tells me look underneath the range to be a buyer. We also have this very strong shot lower, which has a way about it. Anytime we see a strong move in one direction, we expect to get another leg in the same direction. So that would be, again, if I had it my way for tomorrow, that's exactly what I'd be looking for. I'd be looking for that run lower and then buy it back up just below that low. Right? Just below that low. That would be my dream come true scenario down inside that battle zone, right? And then of course, I get that channel here. We'll talk about that in a second. So if I can get this pull back down, again, I really want to get it underneath that low. If I can get that move lower, then I know it's a range. So of course my focus is not to trade the breakouts, but to fade the breakouts, right? Wait for those bears to get short, right? Look to buy into those stops and going right back up in. Now, if we don't get a very deep pullback, remember that next move higher, look for that trap entry, right? Traps are always going to be preferred if I don't have a lot of space, right? So seller failure pattern below, again, ideally below that swing into a buyer pullback, or if it goes too high in the range, a buyer trap, right? Basically a trap low, a bear trap, right, for those buyers. That would kind of be the dream come true. Now, you'll also see, this is the first chart I've added on these channels. What I did was I marked up those highs, and you can see how well they fit off that low, right? They fit off that low like a glove. So there is a chance we may end up stalling out here, right, off kind of the low of this channel here. And so I do want to make sure I'm prepared. And of course, I'll share that with you as well. Now, the biggest challenge we have is if I get a shallow pullback, what's my biggest concern? I'm buying high, right? And what is my favorite setup to avoid buying high? Or selling low for that matter? That would be a trap, right? Looking for a 1, I'm looking for a 2. And really, if this thing starts to hold, right? Basically, if it starts to hold, right, with a 1 and a 2, that's going to be your next best option here if it starts to hold off of this trend line. If it really starts to hold, right, goes up, right, goes up like this. If it really starts to hold the low of that channel, all I need now is that trap, right? I just need to get something underneath that low because it'll be obvious the bulls are still in control. It's just I don't want to buy into that high. And the best way to avoid it is a trap pattern. So again, the ideal scenario is we get that deep pullback, that seller failure, and that rip right back up in. If it really sinks, right? If it really gets knocked down here, you know, I could easily see this area here, which is a little bit of a high volume node there. I can easily see that being a magnet. If it really gets knocked down though, right? Don't forget that 1, that 2. What do we call these again? We call these nested failures, right? And then don't forget, these oftentimes snap back up into a trap off of that low. So if it really gets knocked down, right? Wait for bears trying twice, buy into stops from there, wait for that move up, buy that trap below that low. That'll be a pretty easy setup if we get that run lower. But if all we do is start to grind here, and we're going higher, right? Just keep your eyes on those traps because that's where buyers are going to have kind of their last bit of opportunity here to buy low before they go back up and retest the high. If we do get that grind and that trap, you definitely want to try to leave a runner on that because if it doesn't pull back right now, that will basically ignore that big drop lower. That'll basically ignore that strong move down. There's a lot of momentum now. So if I get that trap low tomorrow, a little trap low here, I will definitely leave a runner because there's a lot of momentum in that situation. And again, we got that big measured move up around that 1707 even. Now again, I do want to stay away from this middle, right? That will be the goal for tomorrow. A breakout would be a 1, strong move up, 2, pull back to the moving average, 3, jump off. You got this, right? 1, 2, 3, find that hidden channel, buy that first touch, right? That first test off that channel. Or if we get that strong jump up, watch that shallow pullback, higher high, and trap low to get that to finish off that move up to that measured move. What does reversal look like? Reversals are always the same, right? Gotta wait for proof. Strong move down, hold the pullback, right? Jump off the EMA. Now we've got bears in control. Again, you're never going to see me try to sell that first pullback, right? Because if you're selling that pullback, that means you sold that pullback too. These are the exact same thing, right? They're the exact same thing. They both have strong moves down. I can't trust that first pullback. I want to, right? But I don't make the rules. I just play by them. I'm going to mark up that low. I'm going to mark up that high. Again, there is some nuance, right, to finding that hidden channel. We'll go over that tomorrow morning in the trade room. But the one thing there's no nuance about is once I find my channel, that first time it pulls back, right, that first channel test off of that high. Target, of course, is down to retest those lows. at 1779. The big thing is if these bears can really get this party going, they get a big wide open space down there, 1766. 1, 2, 3, reversal, mark the low, mark the high, selling off the high, right? Leaving that runner down to that 1766.4. Buyers want to retest the highs. Sellers want to retest those lows. And we are locked and loaded for another big day coming at us tomorrow morning. Now, don't forget, guys, tomorrow morning, 8 o'clock Eastern Time, Monday through Friday. It's very easy to join the trade room tomorrow morning. I'll put all of the membership information for you guys and gals in the description of the YouTube video. I'll also put it, if you're on the blog at Sideways Markets, I'll put a big button for you below that video tonight, right on the trading blog. Either way, get registered. Make sure you join us tomorrow morning at the opening bell in the trade room. And as always, if you need any help at all, right, along the way, please don't be afraid to call me in the office, or don't forget you can always use that live support tool on the right-hand side of our website, and I can answer questions that way as well. But that's it for now, guys and gals. Time to rest up here tonight. Have a fantastic overnight session if you're in Asia or if you're in London. And again, make sure you come out and join us tomorrow, 8 o'clock Eastern Time, in our trade room as a member. If not, we'll come back and do it again tomorrow night in the next edition of our nightly newsletter. My name is Joseph. As always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.